following presentation will compare and contrast two retail organisations within the public houses business in the UK. These are Greene King and J.D. Wetherspoon. Greene King was founded in 1799 as a beer brewer business, and it has grown over time to become the third largest such organisation in the UK, based on number of pubs. It comprises of both brewing and its own brands, pub partners, and also retail activities. By contrast, J.D. Wetherspoons was founded in 1979 and, in a relatively short space of time, has grown to become the 10th largest pub and restaurant chain in the UK, again based on the number of public houses. We will be using it both internal and external analysis to compare and contrast both Greene King and J.D. Wetherspoon. The internal analysis will be used to identify the key strategy and features, and also to identify the strengths and weaknesses that are key to their success, using first the value chain analysis, resource and competence analysis, VRIN analysis, and also financial analysis. From an external point of view, we'll be using PESTEL analysis and Porter's 5 forces to identify how they respond to threats and opportunities. And to sum up in our conclusion, we will produce a SWOT analysis that will show how both of these companies respond to their current market conditions. The contrasted value change analysis between Greene King and Wetherspoons indicates that Greene King has the competitive advantage over Wetherspoons, which is in the most part provided by their superior financial performance. It also shows that Greene King's diversification from its primary activities, as described by Michael Porter's value change model as the inbound logistics and operations, can lead into competitive advantage in the same industry. This is shown in that 15% of their total revenue is generated by their brewery business. Also, their longer trading history helps in that it has provided them with a broad-based portfolio model of leased, tenanted and managed sites that makes them the third largest UK company in the pub trade based on the number of pubs.
Resource-based view will help us to identify advantages and disadvantages and compare performance of both organizations, and highlight the distinctive quality of each organization. On tables shown, we could see that both Greene King and Wetherspoons are huge organizations with over 500 pubs and over 1,000 employees nationwide. Both have various awards. The most distinctive quality for Greene King is that the fact that it has over 200 years of heritage and experience. On the other hand, Wetherspoons is a relatively young chain of pubs and growing and expanding with extremely high speed. The highlight of Wetherspoon is that the quality of food is good and affordable price for most of the society. Both have also wide range of brewing alcoholic drinks as well as imported. Both work close with local suppliers. In terms of staff qualities and management, these two organizations are very similar in trying to train its staff to the highest possible standards. An option to take different training even before actual start date. Also, both organizations have apprenticeship schemes and offer staff activities. Greene King seems has more rigorous approach to their recruitment compared to the Wetherspoon. At the same time, Wetherspoon has come up with corporate social responsibilities and sensible drinking scheme. Both organizations are growing. However, there is a huge competition and they both need to react and adjust very quickly to everyday changes. To name just a few competitors, latest in this lag, Walkabout, Punch Tavern and many others, as you could see on the screen. In terms of the revenue, Wetherspoon might have less on its shoulders, but it makes higher revenue compared to Greene King, 1.197 million to 1.140 million.
Financial analysis. Both companies have seen steady increases in their turnover in the period 2008 through 2012, which, in the face of increases in VAT, beer duty and other tax changes, as well as the worst recession in a generation, is impressive. However, Wetherspoons has grown its turnover much faster than Greene King, in fact by some 32% more, which can be seen in the return on capital employed ratio. This increased growth has been done while keeping its total liabilities to a little under a third that of Greene King's, and as such, Wetherspoons has a much lower asset ratio, almost half of that of Greene King in 2012. However, Wetherspoons' pre-tax profit was less than half of Greene King's, which is a reflection of Greene King's supply-side competitive advantage. Greene King's total High total liabilities have a large cost attached as it spends more than double the amount Witherspoon does on servicing its debt. This is reflected in Green King's gearing ratio, which is almost double that of Witherspoon's, and has meant that Witherspoon's has improved its liquidity, while Green King has, in particular in 2010, seen its liquidity levels fall. Hesson analysis looks at the external factors that any organisation within the retail pub industry must face. From the political perspective, the most pressing factor is that the Home Office has recently launched its alcohol consultation, which will look into, amongst other things, a review of mandatory licensing conditions, a new health-related objective for alcohol licensing, and the cutting of red tape for responsible businesses, all of which could have the effects of improving profitability and reducing the regulatory burden on pubs that have proven their competency. Economically speaking, the recession we are currently experiencing has had an impact not only on the pub trade but the wider economy as a whole, and has impacted on consumer confidence and, more importantly, disposable income. This, in combination with the increase in tax on beer from 57p a pint in 2001 to 80p a pint in 2010, could be seen as a contributing factor to the 15% fall in UK beer sales since March 2008. Also, inflationary trends increase the cost of key products, which could, in the long run, contribute to a risk of tenant defaults and further business failures. Also, there is a planned new machine games duty of 20% to be levelled from February 2013. From a socio-cultural perspective, the biggest concern currently is the national media attention on the negative effects of binge drinking in pubs. Technologically, there is little to speak of in the industry, but something that could be seen as a response to environmental concerns is an improved piece of beer cooling technology, which means that pubs may be able to save up to £3,000 a year through better insulation and improved energy usage. From a legislative perspective, the introduction of the Live Music Act in October 2010 has meant that it is now easier for pubs to have musical entertainment without having to apply for a separate licence. Many in the industry see this as a vital lifeline to help combat dwindling customer numbers in these stringent economic times. This is at least a positive in comparison to the news that there will be a delay in the revaluation of business rates, which industry bodies feel will be revised downwards and would provide some much welcome financial boosts to the retail pub industry as a whole. Finally, from an environmental point of view, like all industries, there's currently introduction of climate change targets, and in particular there is an agreement with WRAP to drive down the packaging used within the industry by 5% over the next 10 years. Bargaining power of customers. This can be a threat for both companies. However, their large managed models can keep costs low, and both companies can provide competitive prices. The real threat is being able to adapt to customers' changing requirements and demands. Rivalry amongst existing competitors. Competition is strong, with about 8 companies that compete with each other with different advantages. These two companies compete particularly harshly, considering that Green King has some 950 pubs, while Wetherspoons has increased its market share to around 850. Porter's 5 forces. In terms of new entrants to the market, the likelihood of a new entrant to this industry at a similar scale to either Green King or Witherspoon is very low due to the limitations of supply and demand, and also the capital investment required. However, the real threat comes from supermarkets providing the same or a similar substitute product than pubs at a much cheaper prices. Both companies share this threat. The threat of substitutes. Supermarkets provide the same or similar products at a much lower price than pubs. However, the quality of the real ale is not the same, nor is that of the service, atmosphere and the social environment offered in a pub. These provided public houses with a competitive edge against supermarkets. More specifically, Green King produces its own ales that are sold in their retail and leased businesses, providing them with greater competitive advantage, due to the lower provider costs than Wetherspoons incurs. Bargaining power of suppliers. Green King holds competitive advantage as it is its own ale supplier, so holds an advantage as a public house company and as a supplier, compared with Wetherspoon's wholesale purchaser-only model. In conclusion, within the public house industry, both companies stand with a solid portfolio. It is evident that the economic situation has affected their businesses, but both have plans to expand and solidify their portfolios. As the SWOT analysis shows, large companies in the public houses and restaurant business should be able to survive and adapt to the economic situation and to the sociological trends by diversifying and broadening their customer target segments. So what about